Welcome to Upside, where every week we dig behind the headlines that are going to affect European venture. Today, we are talking about Anthropic's raise and spend. Is AI making us do more? Alphabet's 100-year bond. We got a bit on European sovereignty and some space. And we have a special guest today. We don't have Lomax Energy. We have Sam Marchant. Big round of applause. Sam, you are a recent Dubai expat, and I'm claiming you now as our man on the ground in the know, who knows everything. We met you many years ago. I think you were Ascension, then went to Hambro, now Salika, and now you're wearing many hats. You are building AI startups, investing in founders through Forward Pursuit, hosting the Now We Build podcast, and now today you've given up some of your precious time to be with us. Thank you so much for joining us. How would you introduce yourself and how would you position yourself in our world?
I think you've done an amazing job. I definitely can't match that energy for starters, right? And I don't know, a few 4 or 5 copies in today. There's no way I'm going to get to that level of energy. And look, it's an absolute pleasure to come on and chat to you guys. Often you get asked to podcast, you think, okay, we have to talk about this topic, this and that. When you WhatsApp down, I was like, great, I get to sit down with 2 friends and actually just talk about some fun stuff. So that's quite easy. So yeah, I'm delighted to be on.
Thank you so much for joining us. We've got, we're bouncing around a bit today. I mean, we are going to go into some of the AI tech crazy stories. And I think we're going to start there with you, Mads. So we're looking at Anthropic. There were 3 things that really caught my eye this week. So Anthropic raising and spending, a massive oversubscribed round there. There was an interesting report from the Harvard Business Review on AI, and is it making us do more? Generative AI isn't reducing work, it's intensifying it. So just have a little bit of a chat there. Alphabet's 100-year bond was the other thing that caught my eye this week. It's properly put the whole organization into a whole new orbit. We will talk about space later, but a whole new realm. So having a look at Alphabet's 100-year bond, it's proper, too big to fail utility now. So why don't we start at the top, Mads? Give us the Anthropic's rundown. What's cooking over there?
So Anthropic, we've been talking about the company for a long time, and they just keep doing better and better. It was clear in 24 when Sonnet 3.5 came out that they were onto something. And ever since then, they've been really powering ahead. Last year they were rumored to be working on a $10 billion round that then became a $20 billion round in January, and they've just closed it at $30 billion. It seems investors just can't throw enough money at the company because it is so hot. AI is the hottest thing on the planet, and Anthropic is the hottest thing in AI right now. Many interesting things here. It's a company that was founded by kind of renegades, defectors from OpenAI that set up the business just a few years ago, and they've now raised more money than OpenAI. They've just pipped them.
Isn't it funny, Mads, how they've, it feels like everything was OpenAI, obviously November 22, when it was ChatGPT. It almost feels like Anthropic has stolen the thunder. Is that, listen, maybe Gemini next year, it could be.
It's not the last story in this, right?
Yeah,
Sam certainly hasn't given up, and he's going to come out with a round, and he's going to raise money. Everything, as we've been talking about, hinges on whether this move to ads is going to pay off for him. If it does, OpenAI will have a new lease of life, and that's going to be a transformed company. If it doesn't, he is in a world of hurt, I think, because Anthropic, they're really heads down executing on this enterprise and coding playbook, and they're doing really well. So super exciting. We're talking about $14 billion of run rate revenue right now, 10 times annual growth. Claude Code right now is rumored to be around $2.5 billion run rate. Enterprise customers are growing like wildfires. The customers spending more than $100,000 a year. So much happening across the board.
Sam, what when you move, you invest across the board, right? You do all kinds of investing. It's not just AI but when you moved to the region, were there any? I guess, was it the same kind of strategy thesis? Was it all AI centric over there? It feels like it is looking from this direction, but do you get the same kind of stories about Anthropic, and is it making the news cycle over there?
Yeah, it is 100%. And I think, look, the relationship between the UAE and OpenAI is kind of well documented, right? The region and how they support Sam and what they think about OpenAI, they've kind of made their bet, right? OpenAI is the leader here. That's where the money has gone. If you then look at, I posted about this yesterday, actually, because I found it super interesting. Anthropic, as part of that round, the QIA, right? So the Qatar Investment Authority have gone in on this $30 billion round that Anthropic have just raised. And I reckon we're going to start to see little kind of wars happening here with the capital pools that we have in the region. When it comes to AI in the region, it's a really interesting question, because what you got to remember is that because of the kind of labor force and the labor structure here, right? And especially with salaries and how they structure things, efficiency savings are not always what companies and executives want to get from AI, right? The efficiency saving is often not that big of an advantage, especially if you've got a skilled workforce, but actually, from a salary perspective, it might not be the most kind of costly kind of team. So then you say, okay, well, AI has to deliver upside value, right? It has to deliver revenue growth. It has to deliver, a totally new value driver to the business for the adoption to actually work. And I've seen in this region in particular, the AI companies that are doing the best are the ones that bring some sort of outsized value creation rather than an efficiency saving. And it's really interesting when you consider that, because it changes the dynamic about how you position these tools, how these tools raise investment because of the metrics that they're then kind of benchmarked against, and ultimately, how these companies are going to grow. So I think it's an exciting time to see it. And the AI adoption here in the region, and obviously speaking particularly about the UAE, is very, very high. But my question to you guys actually on this whole OpenAI Anthropic debate is, are you still using ChatGPT, or have you gone over to Claude, or what's your preference?
I was speaking to, we don't really matter because we use everything. Mads is a massive, let him speak for himself in a second. He's a massive Claude fan, and he lives and builds workflows up the yin yang and amazes us on a Monday when we all collect. He goes, oh my God, he's fizzing with excitement about this new thing that does this new thing. But we use everything. But it's really interesting. I was with two founders yesterday who we would speak regularly about using ChatGPT to do stuff. And without us even broaching this topic, we're talking about Claude doing this and Claude doing that. I'm going, hang on a second, guys. And it's so commoditized. People will just go where the juice is. They'll follow the flow. They'll do whatever is required to get the best output. So that, I think, is a super interesting dynamic, that you don't just have Google crushing Alta Vista and Ask Jeeves and all the old. It's like, I'll just go where I get the best value, what creates the most magic. And I think everyone, listen, in our world, we're maybe a bit myopic, but everyone is moving over to Claude for sure. Are you doing that, even though you're in OpenAI territory? Are you a Claude boy?
Yeah, I was waiting for Mads to jump in and give us some big flash of insight about why Claude is better, but he didn't bite. I literally this week on the homepage of my iPhone, I finally, it's like edit homepage. I finally removed OpenAI from the bottom, and I was like, okay, cool. Claude is coming in, OpenAI is out, and I have to say, from an output perspective on just like everything, I find it much sharper, much clearer. It also doesn't just reinforce everything I say, which is actually quite nice. You want someone to challenge you to come up with. Yeah, exactly.
Mads, I don't know if you got any. Listen, I've already primed it that this is how we roll. But I don't know if you had anything to add to the Claude story.
The journey I've been on is that going back to 24, I found first that it wrote better, and then it coded better, and then the models have just progressively gotten better and better. And then in last year they released Claude Code, and I've really not looked back since then, because that's a whole different agentic way of working, right? That's you set up the skills and you create a lot of the stuff that I think they now have tried to bring to kind of the masses, so lay people with Claude Code work, and it's developing and it's coming. But yeah, I think once you're in that Claude Code mode where you get the command console and all your skills and all the things you do, there's really no looking back. It's just incredible.
Maybe that's the moat. Maybe that's the capture. Interesting. I want to talk about the HBR report, Mads. So tee this one up for us. It was maybe this is no great surprise to people, but effectively saying that AI isn't giving us more time, making us more efficient in I don't know what the right turn of phrase is, in a more relaxing way. Like, we can just do more and our work steady state doesn't increase and everything's fine here. It's making us more intense, helping us do more. So we're doing more, which feels like that's what tech has done ad infinitum going back in time. But is there something in here that we should pick apart?
There's this wonderful book published a few years ago by Daniel Pink called Drive, where he explores the three kind of foundational elements of what gives us drive in life. And it's mastery, and it's purpose, and it's autonomy. Purpose is extremely important, right? And I think everybody who's an entrepreneur, we sort of feel we have our own purpose. We are going out into the world to do stuff because we think it is important. What AI then does for us is it gives us incredible autonomy, because suddenly you don't really need anybody anymore. I mean, you don't need a developer to code up the thing you've dreamed up. You don't need a researcher to go and research stuff. You can just do anything you want, and you have autonomy around getting it done, and you have mastery of all these skills. And that means in terms of motivating us to do stuff, we have never been more motivated as long as we feel we have a purpose. And so if you're a any kind of knowledge worker, whether it's you're doing PhD level research, or or you're an entrepreneur building a company, right? We feel so powerful now. I mean, I personally, I have never had more fun in my life. The feedback loops are so short. It's a constant dopamine hit. Kind of the distance from dreaming of something, or kind of having an idea to wanting to do something and then getting it done is so short. And so, even, historically you might get a little bit tired, or you're like, oh, my thinking is not as sharp. Well, with the AI is really there to give you a lot of support, even on the thinking and on sort of all the masses of data you got to process. So that means that you can go on for longer. You get this constant dopamine hit. And I think when you look at the HBR study, that's really what it's getting to, is that work is more fun than it's ever been before. And therefore we end up working a lot. And is that a good or a bad thing? I don't know, we'll figure out. And, 10 years from now, it was terrible and it made us all into, drooling zombies. I don't know. But I think right now, it just feels like what an incredible thing. It's not like we're sitting on TikTok and just passively scrolling. You're doing stuff. You're building things. You're making things happen. And I think it's very exciting.
Sam, what are your main, I mean, you're a man of many hats. You're doing lots of things. You're investing, you're building, you're still relatively new to the region, I imagine, building network and exploring, researching people and things. But have you got any specific use cases that you are an AI fan of?
For me, a big thing, I mean, obviously, when it comes to the massive benefit and upside of AI, I think from a creativity, like as we just spoke, right? Whatever you're building, whether that could be something media related, tech related, etc. For me, the biggest use case has been in media, right? And how can we not only pull from more information sources, how can I then actually look across this region where news is published in many different languages? News outside of this region about this region is published in many different languages. How can I then not only track that, how can I then kind of, take the insights from that and then create it into some sort of content that I find usable? That's obviously the first thing. I am what I would consider to be a very arguably boring low level user of AI. And I know that might come as a bit of a surprise, but hear me out here. I like to test AI before I would buy most things, right? So for example, at the end of every day, I will now sit with Claude, it used to be ChatGPT, and I will just run through everything I've eaten in the day and ask Claude to be my nutritionist, right? And, even here where you could access, a personal nutritionist relatively cheaply, or a personal trainer, etc., relatively cheaply, I'm like, okay, let's bring AI in and let it take me 60, 70, maybe even 80% of the way to figure out whether or not this is actually worth spending money on to get someone who's arguably a professional with this. What I find now is that because of the proliferation of AI, even if you do bring a professional in, you end up kind of getting the same output anyway, because that individual uses AI to just help scale their own operation or what they're doing. So I'm not sure it necessarily, adds a huge amount when you do go to, I don't know, like a real human for something like that. So those, I mean, those are the use cases really for me. I like testing my ideas with AI heavily, right? So just, I have this view, or, I read this article. What do you think about this? These are how I'm thinking. And just those kind of basic assumptions. But for me, it has impressed me how far you could go with AI before you need to make the kind of real human physical jump. And that, you go into conversations more informed. I'm sure I know you guys at SuperSeed kind of go into investment conversations with that prepared mind thesis, right? And it's the same for me. I just find it's a really useful tool for kind of sharpening yourself up and getting you 60, 70, 80% of the way. I think the issue comes when you believe that it can take you 100% of the way. And I'm not sure we're there yet, right? That's my belief.
Let me build on that for a second, because I think in many ways you're right. There's still of course, there's a place for qualified physicians, kind of doctors who've studied for many years. But have you ever had a situation where you or maybe somebody you knew had some kind of ailment, and they'd go to a specialist, and they would diagnose them, and they would get one kind of diagnosis, one prescription, and they'd go to another specialist, and they'd get a slightly different diagnosis and slightly different prescription? We've always had this idea of getting a kind of a second opinion. There's nothing wrong with that as such. But kind of my impression is that, even the very highly educated specialists, they are bound by kind of the human condition of only being able to hold so much in our heads and only being able to read so many articles and only having so much knowledge. Now, take the long tail of that. Take all the nutritionists and kind of people that don't have a 7-year medical education, but that are advising you on the biology of your body and how different thing functions. Now, some of those people will be very well read and have a very good idea of stuff. But my suspicion is, and it's maybe also personal experience, is there's actually a lot of people that aren't academically that rigorous. Now, contrast that with what you can do with an LLM today, doing deep research, getting it out to scan every single academic paper on a topic, giving it precise input in terms of your blood test, your biomarkers, giving it your DNA. If I had a situation where I had a particular deficiency of a mineral, I fed it my DNA tests, and it quickly came up and said, well, listen, you've got this particular marker there, this variant, that means such and such and such, according to these academic papers. Do you know what? I think if I was going to go through and try and find specialists that could advise me on that, that would have been quite a complicated process. I'm not sure my local GP could have done that. At least not without taking several days of going through stuff. And so, yes, of course, there's a role for qualified physicians. But when we say the 60, 70, 80% of the way there, sometimes I feel it can take us much further than the type and kind of advice we could have gotten and had access to before. And I think that's really exciting.
I agree. I think it's super exciting. I think my skepticism on that, like 10, 20, maybe even 30% less, is because of the fact that as human beings, we're often very happy to make a clear-cut decision, right? And we'll say, okay, I'm standing behind X, Y, and Z research or experience, and this is what you should do. I'll give you an example. I was with my dad, and he was looking at a particular stock, and he put it in. He was actually using Copilot, and he put it in, and he said, hey, yeah, tell me what you think is going to happen with this stock. And I said, well, obviously it's going to come back to you, and it's going to say, it could go up, it could go down. And naturally, that's exactly what it did do, right? It didn't really have a strong opinion. It couldn't really make a clear-cut decision. Whereas, had you gone to an IFA or a wealth manager, they probably maybe also would have said the same thing just because of how those guys operate. But at the same time, they would have had a stronger opinion either way and maybe a little bit more bias. I think in the nutritionist, like, again, maybe we're going off topic here, but like the physician, clinician, anyone in that space, what I like about the tools is that they often don't come in with like what I would call like a research bias or research relevancy bias, which is they're not just going to give you the insight that they got in the last piece of research they read, right? And therefore they're saying, this is what you should do. And it's not actually what you should do. It's the last thing that they read or that they consumed that you should do. Does that make sense? And I think whereas with AI, what we're doing is looking at it and going, okay, I have access to all of this information with a far greater degree of context. And therefore, I'm then able to make a kind of personalized recommendation and tailor that. And that's exciting. That's exciting. I just think it's interesting, and again, we're in a bubble somewhat, right? Because we're using this tech every single day. And when I speak to friends who aren't in this world, the stuff that they're using, GPT or Claude for, it'll be recipes or, can you tell me the best restaurants in this area? I would argue more search engine rather than thinking about how does this replace or how does this get you part of the way to accessing a knowledge worker and their insight. So yeah, it's a really interesting time. And you definitely, I think from our perspective, see a wide range of kind of use cases. And it's really interesting to see, I think, how people use these tools.
It's going to be fascinating using health as an example, how, you get such a broad context. You get to see the world through not just one vertical specialism, but how everything interconnects. And I think that is going to be game changing. The other thing that I think is going to be game changing is the access to the right knowledge at the right time. I don't think either on a personal or on a commercial basis, we truly have fathomed how having all of this knowledge in context, at breadth, at our fingertips is going to impact our home and work lives, because we're only just starting to scratch the surface of applications. And to your point, Sam, most of the people that we work with know this stuff, but everyone else that sits outside of our ecosystem, they don't live in these worlds and they don't have these conversations and they don't live and breathe this tech. So I think it's going to be the next couple of years. I think it's going to be, as this layers into the real world and people use it personally and commercially, it's just going to be game changing and so much fun and exciting. I want to talk about very quickly before we move on about Alphabet. And they have just sold a 100-year bond, which is just incredibly, I mean, this is game-changing stuff, isn't it, Mad? So they have just raised 20 billion, 5 more than expected. And looking at the pricing structure, it looks almost as safe as government bonds. I mean, that's what the market has basically priced it at. And it just feels like this is now pretty much kind of utility, too big to fail. This is infrastructure stuff. What else would you pick up on this 100-year bond from Alphabet?
Lots of interesting things in it, but I think one angle in particular is what we've spoken about many times before, which is this slightly odd way we've structured pensions, in particular in the UK, where there's this notion of kind of matching assets and liabilities and kind of hedging your interest rates on a long duration basis. And what do I mean by that? Well, normally you'd say you've got pension savers and you're going to try and make sure that must try and make sure that you have the money they need when they retire so they can get the pension they deserve. Now, if people retire in 2 or 3 years, you're going to want to go quite heavy into cash and bonds because you don't want money to sort of disappear and have massive stock market corrections right before people are trying to draw that money out. But then on the other hand, if people are retiring 20, 30, 40 years from now, or for those people that are retiring in 30 years, but then need to draw their pension over 30 years, that's kind of a 60-year window you're looking at. And if you have such a long window, equities are always best, right? Over a half century, equities have always massively outperformed bonds. And so you're going to want to invest more heavily in equities to maximize your kind of your long-term return, because that's really what's best for your pension savers. Well, in the UK, we have rules that say that the people that look after the pensions, the trustees, to be a good trustee does not mean to maximize long-term return. It means to minimize the short-term volatility and to minimize fees. And so what follows then is, you basically are incentivized to lock up money for a long period of time in a bond, because that is what the laws and the rules are saying you should do. And it's hard to imagine anything that's longer time than 100 years. I mean, this kind of exceeds most of our lifetime. So lo and behold, there is Google needing some cash, and here are this weird UK pension system looking for bond-like things that run for a long time. And it's a match made in heaven. But unpack it under the covers. If you have that kind of lock-in at 6% over such a long time, let's take the £1 billion at 6% over 50 years, because this is a 6% coupon bond. Now, at 6% over 50 years, it gives you an $18 billion outcome, right? 1 billion invested, 18 billion out. It sounds good. But if you have 9% instead of 6%, so equities instead of bonds, you don't get 18 billion, you get 74 billion. Okay, so it's 4 times as much. And this is the idea of compound interest. It's very counterintuitive, right? We've talked about it as kind of the ninth wonder of the world, right? Einstein famously said it's kind of one of these things that are it's magic. From 6 to 9% annual return difference give you 4 times as much over 50 years. Now, our current rules are incentivizing the pension funds to lock in at the 6%. It just doesn't seem quite right. Now, on top of that, Where's the money going? It's going to fund a US hyperscaler. It's exactly the thing we've been talking about over the last year. It's not going to make the UK, the European economy grow better, faster, stronger. It's going to provide really cheap financing to a very large US tech company that's very dominant. I love Google, but I don't think they need to be subsidized by our money.
But here's the kicker for me, Mads. Here's the kicker for me is like you got 35 trillion or so in savings across Europe. And all of these people that are putting their money into whatever investment vehicle, pension savings, whatever, it's all, they don't even know that it's going to the hyperscalers. They don't even know that it's going to go and feed the 100-year bonds and the beasts.
No, and to some extent, I mean, all they should expect is for the trustees to invest the money to give them the best possible return. And that's just not what the rules are saying today. And that's what I find to be so frustrating, right? The rules should say maximize the long-term return. And when it comes to the tax incentives we're giving people, those tax incentives should be aligned with what is in the best interest of our economies. Neither of those things are true today. And I know Rachel, she keeps saying, I've fixed it, I've done it. We have not. It's not. Yeah, we have not really scratched the surface of this.
Yeah. It kind of raises the inflation challenge as well. I always wonder if what's their coupon rate? 6.5%, I think, for this. It kind of makes me think, well, this is a very long-term bet on a lot of very, very interesting assumptions. We'll see where it lands. We'll see what happens. It's kind of put it into a whole new realm. I think the only other company I remember doing this, this is back in the 90s, was Motorola. So they had a 100-year coupon as well, didn't they? Do you know what happened with that? I didn't pay much attention. Do you know how that ended? a very nice frame on a wall somewhere, I imagine. A very like shipping bonds, or I don't know, what are the big old school things are there that are probably now framed pieces of paper in somebody's library somewhere with absolutely no value. I want to talk about European sovereignty. Some interesting things caught my eye this week that I'd like your thoughts on. So PitchBook kind of opened this a little bit. Not really. It's kind of aligned, so stay with me. Their report stating that VC is a two-tier market. So AI and other, no great surprise. It's slightly deeper than that, as in there are now two VC industries, I would argue. There's the mega funds and then everyone else with AI and everything else. But there were also some bits around every single EU leader, like Merz and von der Leyen, just sharing really kind of punchy, we're going to crush planning. We're going to, if you're not on board with this 28th regime, we're going to set up a two-tier European Union. And if 9 of us or more agree with this, we're going to, not listen to the trade unions, and we're going to absolutely go for it. And then looking at Mistral going from $25 million run rate to 400 million, selling to the who's who of French enterprise and banking, and how they've tied that up as a full sovereign stack with the deal with the Swedish data center company, who are their eco data center in Borlänge in Sweden. No US tech involved. It just feels like we are obviously very sensitive to noise and words and no real action, but it feels like Mistral has given us like an example of how we can do sovereign tech. Merz von der Leyen saying, we're going to do this. We're not going to worry about planning. If you don't get planning rules cleared in a month, we're going to assume that we're going to go. I mean, it's like, this feels like, whoop, whoop, we're off. But where would you start? And well, let's start with the PitchBook stuff. I mean, what are your thoughts on the PitchBook report with this two-tier marketing stuff? Let's start there.
I felt like either they had to write something because they had to write something. I mean, we kind of, everything that's not AI right now is just not that interesting, unless maybe it's quantum or fusion.
Yeah.
What if you're not using AI now and what you're doing? Okay, I do material science. Well, are you using AI to develop and make it better? I'm doing biotechnology. But are you using AI to make it better? I mean, if you're not using AI for what you're doing, what are you doing?
Yeah. I guess I know you're not a big fan of like pulling reports apart, because a lot of it is, sure, it's a little bit, we know this. But I think the only challenge I have to this is what is an AI business and what is not an AI business. And I don't know how really they're classifying. But let's dig more. Maybe let's look more at Mistral and the real moves and shakes on the 28th regime side and on the sovereign tech and the sovereign spend. What are your thoughts more on that piece?
I mean, to start at the beginning, I mean, there is this notion that, we're behind the US and we've fallen behind. And, how do we avoid also falling behind Chinese and becoming poor? And that's the sovereign tech angle. There's also a security angle, but there's also just an economic prosperity angle on it. Quite basically, will we be able to afford having welfare societies with free healthcare and free education and some of these nice things that we like and think are important? Schnabel came out and said that actually the gap isn't that big if you take into consideration number of hours worked. If only Europeans worked as many hours as the Americans, that would close 2/3 of the GDP gap. And so I think the challenge with that is it feels a bit of a convenient framing. It implies that it's just a lifestyle choice, that Europeans are just working less because, we have more healthy work-life balance and all that stuff. But actually, if you look at the numbers, the hours gap has narrowed. It was 20% below the US in 2000, and it's just 10% below now. So relative to the US, we work more than ever. And even so, the GDP gap has widened. And Banque de France, they made an analysis that said, if you strip out the tech sector, European productivity is on par with the US. But the reason the US is so much ahead is because the tech sector is so much bigger and so much more successful. If you compare just the US and France, the tech sector alone explains 68% of the entire productivity gap between the two countries. In essence, Europe's GDP gap is a tech gap. The reason our GDP is lower is because we have less tech. And that is why startups and entrepreneurs and creating the conditions in the ecosystem for tech entrepreneurs to do well has never been more important. And the countries that have done that well have prospered incredibly so. The United States is exhibit A, a little bit closer to us. Israel is exhibit B. If you look at how that economy has developed over the last 30 years, it's been driven by tech to an incredible degree. And so the more tech we can get, the more productive we will be, the more successful we will be. Now, that then all goes into the context of your next question, which is around Mistral and what's happening with Mistral. If we look at sovereign European tech, there are really two aspects to it. There is, as we said before, there is kind of the whole, can we defend ourselves? Can we make sovereign and autonomous decisions, or can others switch us off? That's important. But there's also there's the economic, angle. And just really simply, you think about some of the stuff we do today, spending money on an offshore tech or overseas tech. Take something as simple as Microsoft Windows and Office. Today, you have perfectly capable open source alternatives running on Linux. And even so, European governments are spending billions of dollars every year with Microsoft for decades-old IP. I mean, has there been any update to the Office suite since the
No, there's only been
noughties?
Google, right? There's only been the Google Docs spreadsheet slides suite. That's been the only other main
Right.
contender.
So billions of dollars are being spent every year. Probably didn't need to do that. Could probably do that differently. And you said you multiply that across the sectors. There's a lot of stuff we could do locally. But then there is also the Mistral of the next gen stuff. And you're absolutely right. What Arthur Mensch has done is really impressive.
I'd written them off. I genuinely written them off. I thought this is going to
I think what we said a year ago is it's going to become an application and solutions company. And if you look at what they are today, I mean, it's a fraction of their revenue is the chatbot. That's not really where things are going. And I think even when you look at the API platform, that's probably not much more than 20 to 30%. I think the majority of the revenue, it's enterprise contracts, it's big organizations that buy something that is a mixture of consultancy, transformation, and of course, with all the AI power in the background. You look at how they work with ASML today. Very, very close strategic collaboration, where Mistral becomes something that's a combination of an Anthropic with all the models and perhaps an Accenture that does the systems integration, or maybe not systems integration, but sort of call it development of capabilities that then can be implemented later. So all
But it's a sovereign play,
work.
right? This feels like a very strong sovereign directive. Is that fair? They're not looking at the tech. They're looking at where their data lives. It almost feels like it's a regulatory compliance, no US tech here. We're not going to be beholden to any rules that live outside of our walls. Is that fair?
Is the assertion that's implicit in that you could go to Anthropic and they would give you a better service than what you can get at Mistral.
But this is the thing that's on my mind. Are we at a layer now where the tech is so good, it doesn't need to be the 10, it could be the 8 and be absolutely functionally perfect for the application within my business. And I know that I don't have to worry about data transferring over to the West Coast or other regions. I have got a complete sovereign control and the tech works. It's not like it used to be that anything that was enterprise or business, you had to get the best because there was a kind of a margin of difference. It feels like this is all good enough now. This is working absolutely perfectly for what I need it to do.
That may be part of it. Think about it this way. If I'm the chief executive officer of BNP Paribas, and I'm sitting in Paris, and I'm just kind of France's largest bank, and I want to use AI to transform my business, and I want to bring in some really smart brains that can help me do that, would I rather call Arthur Mensch, who's sitting across the road and can bring his SWAT team over to help me do that? Or would I rather make a call to California and be number 75 on the list of priorities?
So you think it's customer service? You think it's a service play?
I think that's a huge part of it. I think you'd rather do business, but so much of consultancy and advisory work is local. That's what I'm saying is this is not just me buying an API.
It's not just platform, right? I see where you're going. To me, okay, so we've got sovereign, we've got service and application, as in help me transform. And you've got all of the regulatory compliance and all of the other aspects that come from having a full stack sovereign deliverable.
I absolutely think so. And if you extrapolate that, what is that going to look like in the future, right? We often talk about what's going to happen to tech. The obvious question becomes, if we get a more kind of regionalized, more fragmented tech market, what's that going to do to business, to venture capital, to startups? Are they going to be able to be big? And there's going to be two countervailing forces. Because I think on one hand, yes, you will see more regionalization. I don't think you will get complete hermetic seal between the US and Europe, and I don't think that's desirable. I don't think that's what anybody wants. But there's going to be more of a push to buy local things. And you could argue that that's going to decrease TAM, lead to smaller outcomes, and therefore less returns. But at the same time, the size of the tech industry is going to continue to grow and explode, because with AI, we can do so much more. And I think the second factor will outweigh the former. So I think you're going to see more very, very large tech companies, very, very large tech outcomes serving more regional markets. Just ask yourself, what is the probability that sophisticated German manufacturers are going to use AI from China to run their factories? I mean, it's somewhere between 0 and 0. It's just not going to happen. So even if China becomes the best in the world at AI for factory automation, you're still going to see a massive European industry do AI for factory automation. For that
I bet they're all going. I bet they're all heading over there saying thank you. So I bet we're flipping the Chinese model backwards, and rather than them copying us, we're going to go over and copy them and then bring it all over and then accelerate that journey using AI.
Because that's the beauty of free markets and free enterprise and competition. And that's what we should do. Now, the question then becomes, have we woken up enough in Europe to break down some of the barriers that are in the way today? And that's to Europe. I mean, you were talking about von der Leyen, you were talking about Merz, you were talking about...
They're making the right noises, aren't they? They're saying the quiet bits out loud now.
Here's what's interesting. You see, so the European Commission, has kind of quote unquote the protean European government, their role is to stand for and protect and promote European integrity. And if the head of the European Commission says, listen, unless you're on board, we're going to create a subsidy that's going to go alone. I mean, these are big words.
That's massive.
This is kind of not how this stuff usually goes down. Now, it's been tried a few times before. People have tried it around tax. It always flounders, but it feels like there's more momentum now than there's ever been before. On the other hand, I would say, and this is kind of why this might not go as quickly as some people would like. You look at Merz, he's saying all the right things, but you look at the local political setup. We're a little bit further away from it than we are from Westminster here, but his government is far from stable. He doesn't have the parliamentary majority to ram these things through the way he probably would like to. And it's not obvious that he could go into an election to get a new mandate and still emerge as the chancellor, right? So you've got, and it's exactly the same problem we have in the UK, where you have kind of on one side, the people that won't, and the other side, the people that can't. And it's just not obvious, how you get a setup with leadership that's going to lead you out of the crisis. So yes, we see more and more people seeing the right things, but will the political system, are we set up to be able to do the things we all know we should do?
Are there 9 countries that would clump together for this 2-tier European Union that would jump on the 28th regime bandwagon, ignore trade unions, which in Germany, surely that's going to be the hardest country to do this in, to your point. But are there, do you think, 9 countries that would split?
Well, so I don't think they'll split. So I think the 9 countries, that was around the Capital Markets Union, which many people see as something that's really important. I could see that happening. The challenge is when it's been tried in the past, it always flounders somewhere on gold plating. There's some local rule or some local regulator, some local interest that says, well, it's kind of fine, but we want our rules a little bit different from everybody else. And that's where it falls apart. The 9 countries are already lined up. I mean, we know who they are, but will they have enough political power at home, those governments, to push things through?
That's where it collapses, right? Yeah. Okay.
100%.
Okay. Last on the list is space and energy. This was the thing that caught me last week, kind of midnight, 2 a.m, reading, understanding, exploring, because this whole orbital data center piece I find absolutely fascinating. And there are 3 things that caught my eye this week. So Orbex, which is, or was, should I say, the low carbon micro launcher in the UK, the rocket business in the UK, has sadly filed for administration. It's got 49 million pounds in debt, and the UK government hasn't supported. There's been some challenges with the National Wealth Fund. I don't know what went on behind closed doors, but they were valued at 220 million, and they are now shuttering, closing doors, and we'll see what happens with IP and facilities and what gets absorbed where, but that's really sad. So that was a piece that I was reading about. Also, alongside Elon, looking at Google's R&D research project Suncatcher and startups like StarCloud and what they're doing about high-scale AI computing in orbit. I think it just absolutely blows my mind, all of the physics and maths and how all this stuff is gonna work. I personally don't think it can yet, or meaningfully at economic levels, but there are some basic physics and maths to resolve. And then the third thing was Andrew McCallep's space calculator. You saw this, didn't you, Mads? I remember us talking about this, but I love this man. I was reading his space calculator, which basically broke down the maths of how a data center in space could or should work. And his end conclusion was, it might not be rational. I'm quoting him here. It might not be rational, but it might be physically possible. And then one of my favorite quotes, and if you don't know who he is, you must look him up. Andrew McCallep. He's written all out, laid bare online. His last quote, which I'll just read, even though it's a bit long, bear with me. I love this. It's like, he says, I'll go one step further and say the quiet part out loud. We should be actively goading more billionaires into spending on irrational, high-variance projects that might actually advance civilization. I feel genuine secondhand embarrassment watching people torch their fortunes on yachts and status cosplay. No one cares about your Laura Piana. I had to Google what Laura Piana was. If you built an empire, the best use of its burn is to burn capital like a torch and light up a corner of the future. I think that's just so poetic and genius. Fund the ugly middle, he says. Pay for the iteration loops. Build the cathedrals. This is how we advance civilization. So they're the 3 things that caught my eye. I don't know where you would like to pick up or what, but I guess the big question is space the answer?
I think that depends entirely on the question.
Yeah.
I think Andrew McCullough, he has it exactly right. I think from a geek, engineer, sci-fi fan, I think it's incredibly exciting. And that's great, right? And we hundreds of years ago, kings and queens, they paid for people to venture across the sea to find new oceans and find new continents and new territories. And probably it wasn't an NPV positive project if you looked at it across the portfolio, but it advanced things and it brought us closer and it helped us create the modern world. And that was important. And these things are important from that perspective. Is it venture backable? Probably not right now. That's okay. I mean, it's fine. That's what we have billionaires for, right?
Yeah. Well, that's what he's saying. He's saying kind of, I think we should use Elon as the example. I know obviously Bezos is doing his is it Blue Origin, Bezos? So, and we never hear much about that in the press, because I think Elon sucks all of the oxygen out of the news cycle. But you know that that's going on as a kind of almost competitor for NASA contracts. So we'll see what happens with his stuff. And yeah, I think it's fair. Get more of them spending on things, even if crazy, just to advance humanity, I think is no bad thing. Any thoughts on the Orbex piece before we move on from there?
So they failed.
Yeah.
And that means
was it inevitable,
that,
do you think, Mads? Was this inevitable? Yeah, okay.
there's no European small launcher that has reached orbit, not one. Yeah. And I love the entrepreneurs that are working it, that are trying. But the truth is that, we've got all these wonderful small and mid-sized European countries, and we're just not big enough individually to get this stuff done. Airbus exists because no European country could build a competitive airline manufacturing company alone. And launch requires the same logic. And today, Airbus is the leading manufacturer of aircraft globally. And we could lead in other engineering places and areas, but we got to decide to do that. And then we have to work together and stop thinking that because, the United Kingdom was, an empire 100 years ago, or France was an empire, we're just not anymore. We are mid-sized countries, and we're trying to take on these massive global-sized engineering challenges, and let's work together to get it done. And then when we do that, we can absolutely compete and we can win. Let's do it.
There was one other random news story that caught my eye, which is about fusion. So not space, but yeah, I mean it's fantastical, and you could put it almost in the space bracket. But any thoughts on that fusion piece?
Fusion is interesting. I mean, sometimes people, they connect it to AI. I mean, I think we need energy for AI right now, and we need a lot of energy in the future, because energy is the foundation of modern civilization. Energy is how we transform things from one state to another state. And when we have limitless energy, we'll no longer run out of anything anymore, because we can transform everything from one state to another state.
I've always thought that this was the European opportunity, quantum and fusion. We've got so much R&D, so many smart people. This almost felt like, forget about AI, let China and the US do that, and we'll hopefully work out our own versions of sovereign tech. But should we double down on quantum and fusion as the next 10, 20, 30 years time? Is that a bigger part of the European opportunity, do you think?
Well, what does double down mean, I guess? I mean, there are lots of subsidies going into research. Yes, but to do that, we need to have a capital markets union. We're right back to the previous segment.
Circles of life.
Right? Everything is about fixing how we get capital allocated to the right things. Today, European money goes to US capital markets that then are used to buy up European assets. We've spoken about it here on the pod in terms of great quantum companies. If you go public in the US, if you're in the US capital market, the same type of companies sometimes traded up to 10 times valuation difference. For you and me as a venture investor, it means a lot less. We can sell and exit to US capital markets.
Yeah, we follow the money, right? We will follow the money.
But for the European economy, it matters greatly. And so we have to fix pension rules. We have to get the capital markets union right. We have to fix our local stock exchanges. We've got to get all this stuff done.
Any deals of the week or anything we haven't spoken about that you wanted to raise this week?
No, it's been another exciting week.
Yeah. The news cycle's been bouncing. Sometimes we get together and there's not that much in the news cycle that we compare back down to Europe. But it's been the last couple of weeks I've found extremely exciting. I think my wife is very bored of me raising this stuff at the dinner table, so maybe I'll have to rein that in. The only thing I wanted to highlight was Olex, and I'm watching this 25-year-old British founder, James DeCombe. He's just raised 220 million, valuing Olex at over $1 billion. His AI chip startup, this new innovative way of focusing on AI inference. So that's super exciting. And he also runs he's the CEO of another startup called CoMind, which he co-founded when he was a teenager, raising 100 million. I mean, is this our Elon without the red cap? Is this our dude? I don't know. But I think that's just one or two businesses and one founder that I wanted to highlight. But anything else that you wanted to go into before we close off?
No, I think that's great. I mean, listen, nothing happens until somebody decides to do something, right? And that's what entrepreneurs are for. And we just need more of them. And this doesn't mean mollycoddle. It just means, let's try not to stand in their way. Let's make it, create a great society where you can be an entrepreneur, you can build, you can aspire, you can raise capital, and you can build and make things happen. So I think it's a great thing. Let's have more of that.
we've really ended on an upside. Thank you, sir. Catch you next week.
Always a pleasure. Good to see you.